One of the most amazing parts about this system is the flexibility that it gives to traders, uh, depending on the style that the specific trader has in mind and how he wants to use the DTVB system. Box color alerts in the radar screen are just simply fantastic ways for us to identify different changes within the system of trading. And so in this particular example, I've got a radar screen alert, and this particular one is the master. It's actually a combination of three. It has indicators that are equal, that if you look at the top line of the indicator, the equal sign is a yellow box, and then the text going up or down is red text or green text, and then crossing over or crossing under is a red or green box. For example, over here in this column, price green is crossing over red. When you have that situation, when it crosses over, it's a green box. When it crosses under, it is a red box. You also, this is the standard way that I set up my radar screen. I have the symbol, of course, the interval. In this case here, we're on the 5-minute chart, and then the last giving us the price that it's currently at, and then the number of shares that you can trade using a dollar amount as a basis each time you pull the trigger. And I think I have it currently set at $10,000. It's usually where I keep it. And so it tells me, for example, if I want to buy LBTYA, the second one in here, it's at $33, and I can buy 295 shares. Just, quick reference point. There's much more sophisticated ways to do this column share thing. You can attach it to your account, and it can give you the total in your account, but it's not logical to pull the trigger on your entire account. So it makes more sense just to establish a given dollar amount that you want to trade each time you pull the trigger, and then you can round up, or like in this case here, I'd probably buy 300 shares of that second line versus 295. So you can make those decisions. This particular indicator, if you'll watch, I'm going to click the top line, and you can see all the white and pink and blue and Zion colors are this indicator. So in other words, whatever number of columns there are there, that is defined as one indicator. And this is, I had separate indicators on the crossover prior to this, but I was able to, for obvious reasons, connect all three of these together. And so, for example, I have here in the first three columns, this one and this one and this one, this is the price green, the price red, and the price blue. And it's based on we see a crossover. When you see a blue box, for example, the blue box tells you that in this particular case, like in this one right here, price red has crossed under price green. And so we see a blue box. In the main part of the chart, we have the yellow box telling us that the indicators are equal. Now this is not as valuable on a 5-minute chart as it is on a daily chart. When you get a number of columns lit up in yellow on the daily chart, it means those lines are equal from yesterday to today. And when that happens, you oftentimes get significant movement. Even when 6 or 8 of those columns are identified, you can get some pretty strong movement the next day. You just have to go to the indicator and see which way it's going to go, because that flat value from one day to the next is indicative of something that's going to move strong the following day. Likewise, you notice here I have the price green in these first 3 columns. Those are price barometers. If you look at this column right here, Swing Zion is a price barometer, and it's marked capital B, capital P, capital B, MTR, standing for price barometer. Same is true over here with Zip Pink. Those 5 lines are price barometers. If you wanted to keep them together, for example, you could take this price barometer, click on the top line of the box where the header is, and take and move that over here next to the other 3. So I've now moved that entire column next to the other price barometers, and I can do the same with this one here. You can put these columns in whatever order that you want. So I now have all 5 price barometers in next to each other. But it's obviously not needed, or most of the time it's not needed, because you know that if one's going to go in one direction, so the others are going to go in a similar direction in literally 99.9% of the cases. Once in a while, for a few seconds or a few minutes, you'll have something that's odd in what's happening, but very seldom do you see that. Now, those particular lines that you want to watch, or how do I, this particular indicator is one of the best general radar screen indicators to watch, because it gives us so much information just with that screen. If you notice when I click on this here, that indicator lights up, but on the back side of this I have the short-term trend lines, the 5 lines of the short-term of this, or the 5 columns. I use trend yellow over here in the left column, because yellow and the pink and blue line all move in the same direction at the same time. I just used one column, so the 7 lines of the short-term trend are depicted on these 5 columns. And obviously when you have a grouping of all green, you know that particular stock is going up, or let me say this, the short-term trend on that stock is going up, and it obviously can fluctuate as it goes up. The white text also indicates that it's above 0, and the red text in the short-term trend lines mean it's under 0. So you can tell exactly where your lines are. It's a quick reference point. I use the 7 short-term trend lines almost on every single situation I examine. We'll use the 7 with other indicators, like for example this one that shows you the equal, those indicators that are equal, and those indicators that we can identify that are going up or down, and of course your crossover, cross-under indicators. Remember, when your price lines cross over or cross under one another, that's basically a divergent situation. There is another radar screen indicator built. If you haven't seen that video, look at that video as well. It strictly deals with divergent situations. That one is very powerful in identifying gaps. Not all gaps have divergent indicators. Sometimes you'll just get one or two. Sometimes there'll be a handful or even more. And when you get a handful of divergent indicators, then you obviously have something that typically will gap, or at least move real strong the next day. So depending on how you want to trade or what type of trading you're doing, this particular indicator is a powerful tool to just immediately tell you, just by simply moving them over and capturing both of these indicators at the same time, this one here and this one here, you can see where the short-term trend lines are going in relation to what's happening with the rest of the movement in either crossover, equal, or up and down. So it's a powerful way. Keep in mind too, it is live. This is, and obviously that shows by the clicking of the and the changes in the lines as we see them move. Keep in mind here, I am on a 5-minute chart, or interval, I should say. And so these crossovers are much more powerful in your 3 price green line columns. These crossovers are much more powerful on the daily chart and tell us a lot more as well. Just exciting, isn't it, that we can use this information, or I should say see this information, and it all comes down to sensitive indicators. You can take the default indicators on TradeStation, and you're not going to get anywhere near the recognition of divergent changes or of other types of movements. The tiny market force changes from sensitive indicators is the key to the system. That's why if you've read some of the literature, you may have heard me comment or say that the indicators are the heart of the system. Because with the indicators, it helped us find the 20+ patterns in each of the pattern types up and pattern types down groups. So with the indicators, the patterns were created, the conditions were created or identified, or in this case, you might say verified, because we always pick patterns with good conditions, because it gives us a very high probability when we have those good conditions that the next day that movement will be as anticipated in the direction we're contemplating, and it is likely to have a strong movement as well. And so those conditions that we select, and that theme runs throughout the entire system. We have patterns, conditions, and signals, and that's true if you're looking at a next day up, a 1-day movement up, or a 1-day movement down. It's true if you find uptrends or downtrends, and it's true if you find gaps. The gaps have more sensitivity relating to supporting evidence after you've established the basic requirements for the condition within each of the 3 patterns. But the principle is the same. The idea is the same. We're gathering more information, and the more information we have, the more powerful the movement is typically. So just an amazing way to see things. The radar screen gives it to us live. You can tell what's happening instantly. And the other thing, I guess the last thing I'll comment on, is that you may have seen videos of 330 minutes, which is basically an hour before the market closes. This is how we're searching for gaps. And oftentimes gaps will occur when candle movement is real small. And so you can talk about the location pattern or the shapes pattern. You can talk about those specific shapes, or we look at shapes from a visual, from the 22 market force recognition indicators, which basically give us our visual signals. The same signals in the power chart for those shapes we sometimes refer to as the 7 power shapes of the power lines, the power 5 or power 4 or whatever. But they're basically the same shapes, just on different charts. But now, all that being said, the indicators reflect a tremendous, or give us a tremendous ability to recognize those tiny changes that occur prior to the big movement likely to occur that day. And so the indicators are really and truly the heart of the system. And so we're very grateful that these were developed over many years, and this all started in 2007. And so after more than 10 years, the system is quite effective. And the radar screen indicators, there's 8 major indicators. They're called DVD Master -RS, standing for radar screen, and then it gives you the name of the indicator. Like this one here has the 3, the equal to, the up-down text, and the crossover. The others have like the down touches and the up touches in the trend chart, or the divergence in the indicators. Or for example, the 7 short-term trend lines is another one. And so all these 8 are really just simply amazing in giving you because you can set up 100 indicators or 500 indicators, and you can literally find all of those. You can find the identical indicators. You can find the proximity locations and the proximity shapes. You can find the down touches or the up touches in the trend chart. All of that stuff for the requirements for gaps has radar screen box color alerts set up for you to use. Powerful information, instantaneously delivered. And that's really the way you need it. But the main idea I wanted to convey here was that even though I've talked about finding, everybody has a little bit different style. Even though I've talked about finding gaps an hour before the gap occurs, because you really don't need much more time than that, but literally when you have a small candle movement, the setup for a gap could be within an hour or 2 after the open. So in other words, if you want to locate gaps, you can locate gaps, by noon, even late morning sometimes. You just need to verify them before, I'm not sure I'd pull the trigger till, after, near that close of the day, or at least within a few hours, just because it could change by the end of the day and you wouldn't have that setup for the gap, but it's not likely, because they typically, after a few hours of trading, the setup for those patterns is established in the indicator lines, and it doesn't move. So you can really do that several hours. You can really gather your gap information several hours before the closing bell. That's the idea I wanted to convey. But it's amazing. We kid you not, the amount of search methods and tools available on this system, the sensitive indicators within the system, the 3 pattern or the 3 powers of the system, the 3-step formula that gets us to the high probability trades that we make. I mean, if you're following the procedure of selecting one of the patterns in either group, and then you're finding the good conditions that go along with that pattern, and you're using a signal to enter or exit the trade, you are in a very high probability situation of how that stock price value is going to react. I mean, very high, way above 90%. And it's because of that example where I talk about where you take 10 patterns and 2 of them are nice green candles, 5 or 6 are small green candles, a couple of them might be even a red candle. When you see that pattern appear generically, and we take the conditions within those 2 nice big green candles, if it hasn't dawned on you, those conditions are now 100% of the conditions that we use for that specific pattern. And so that's why the high probability of over 90% occurs each time, because we're hand-picking those patterns. We're hand-picking those conditions that go along with the patterns. That's what makes it exciting. Every time you pull the trigger, if you're following the basic procedures in the system, you are entering into a position in a high probability stock condition. It works, guys. It is absolutely amazing. All you have to do is work the system. And there's great flexibility in the system, giving different styles or different ways that each of us might choose to trade. So look at the other videos on the other master radar screen alert screens that we have. It'll just allow. Oh, the other final thing. Excuse me for going on, but one final thing. Just like I moved those indicators from one column to another column, if you find something like, for example, I've got a lot of divergent columns, but I don't have them all. If you want to add a divergent column that you see, you can add another column to these indicators. So they're not set in stone. You can subtract from them, you can pull out, you can add to, however you want to do it, just to work your style of trading. Some people just like to trade a handful of specific patterns. They're more successful doing that. And that again is up to you. So it's amazing.